Okay, so this is going to be the trade review for today's buy positions. We did attempt a couple times, I believe. I believe we tried one time, it went up in our favor and then hit that 2085 and came back, and then we took a break, and then there was a 930 15 5-minute midi that played out pretty well. That ended up taking the all-time highs. Now, we ended up taking it to about 28,580s or 28,600s. I'll have to look here in just a second. But let me make sure I pull the chat up here. Okay, cool. So let's see here. So let me look at the two things. So the market does open in 10 minutes. So I'll go over pretty much just the buy position that we took when it come to NQ. I'm not going to really go into yesterday's price as much. I didn't do a review. We were actually eating dinner with my girlfriend's family. So we ended up taking positions to the upside, but they were, or actually we didn't take a position at all on stream. Excuse me. I was trying to think of which day that was, and it was actually Tuesday. So they ended up just shooting up in that first 5 minutes just really, really fast, and they were already closing above these highs here. And we were pretty much seeing that as, continuation, and there really wasn't a way for me to just find a move without forcing it, I'd say, at New York Open. So yeah, that's pretty much what yesterday came down to. So but going into today's move, why I call it, the RSV model, right? So being on the right side of the V, right? Given it time for the actual trade to develop is something that a lot of us we struggle with, right? Or it's hard to actually manage the trade. And so these are some of the things that I actually personally use step by step to be able to take that type of trade, right? Now on the Discord, if you guys are looking at the description of this post of this video, I do have the links to the free Discord community where you guys can join other like-minded traders who are reading the markets from these same concepts, and have that mindset of observe the masses and do the opposite. So looking at it today, I mean, obviously, overnight I talked a lot about inside the Discord what oil was going to do, right? So I was looking at prices, from 4 hour, 1 hour, daily, obviously higher time frames as well. And what they did was they basically manipulated price overnight. So they just obviously pushed this price down here on crude, right? And it just completely falls off a cliff. Now, I was anticipating this, me personally, especially here on a daily, because of how I read supply demand. I was wanting to see the shorts that, from 102s, right, be able to see a fast move or even a move just anywhere down into this demand candle at $90 a barrel. And what I anticipate based on the location of the setup is that the individuals who shorted this area, the only way for them to get out of like a futures trade, right, on the sell is for a buy limit to be sitting somewhere under old lows, or they're going to, emotionally or just manually, right, based on instincts as well, they exit the trade by, they're in a sell, they're buying back their position, okay? And so we anticipated that to see that type of move when it comes to oil. And then when you look at the overnight for NQ, when they did the same thing on oil here, when you're looking at like a 15, when you're looking at NQ in the overnight, right, it's going to be here on the right side. Obviously it flies, right, because oil falls off a cliff. This has been working really well with the correlation, and price just flies back up to 28,600 in the overnight. Now that kind of builds my bias into what I was wanting to see in the New York, right? Because during New York, I start really evaluating what the markets are doing around here at 7 a.m. So it's going to be right around this candle here is where I started like really looking at it. And now I'm looking at oil at the same time, right? And I'm reading, the fall off from the overnight and anticipating short covering, right? So buys are going to fill because that's just how order flow works, right? And we would see a bounce possibly back up to 95 or 94 or 97, right? So one of those whole levels of price. And so we ended up seeing, when you look at NQ, like I said, the massive rally when this falls here, which is oil, and price rallies up to 28,600, and then before New York Open, right, price is starting to sell off. So just imagine for a second, okay? Imagine you had a short position from 28,600. Where are you going to put your TP, right? Most people are taught different things, but most people are going to be taught to put it at liquidity, right? If you took a sell up here, I mean, obviously you can target other areas in here based on R multiples, etc. But a lot of people are going to be looking for this type of area for a good take profit, right? And so when you really think about it, the only way for anyone, if you are in this sell, right, from 28.6, and then New York Open is down here, right? This is our New York Open. At this point, you are from this purple line, 28,600 down to 28,400. You're 200 points in profit on the sell side, right? So now functionality plays a big part. I'm going to focus less on oil here just for a second and just focus on the NQ. And so now when you look at the 1 hour NQ, right, we're bullish, right? So we're looking for continuations until proven otherwise. So one of our reference points we talked about inside the Discord was this H1 stacker candle. I call these stacker candles, or stackers inside of a bullish trend. And so we wanted to see how well price was going to respond, not only there, but also in what's called a fair value gap, right? So this gap between 28,350 and 28,413. So this gap here. And as you can see, price comes right back into FEG, right? Right inside H1 demand, right? So I'm going to be doing a couple videos where I talk about, like I said, different things where it comes up, different buy models, right? There's people that teach different models. There's people that teach, different buy maker models, right? So the one thing that most of those people are missing is the understanding of demand in different areas of supply inside the intermarket analysis, right? And so having that understanding of where that H1 demand was, where that 15 H1 FEG was, and just to kind of like reference the area, this is the area I'm talking about here on 15, right? We knew that this is a great area for continuation because we're anticipating two things. One, we're anticipating that shorts that sold from 28,600 are covering, so there's buy limits filling. That's the functionality of trading in this fair value gap of 28,400. And then we're looking for continuation if individuals continue to do specific things, right, on this cover position to see if it's going to continue through those all-time highs, right? Now, once we had the area marked up, which I just showed, which that was the area, right? H1 demand, H1 demand candle, 15-minute imbalance, right? So now, when you go into the 15 and you go into the 5, we have our area. We know what time we want to take the trade, right? We want to execute during the New York Open. And just remember, guys, in like 3 minutes, the market might open. It might be a gap. We'll see. But, excuse me. So now, pre-New York, I was looking for some shorts in that 28,600s. I was also looking at 28,500s. Right, because price had basically started to, and this was pre-New York, price had closed 730, this candle here, to 745. It closed lower, showing signs of weakness down to this inefficiency and closer down to this demand and possibly through the low of day, right? And so I was wanting to see maybe they're going to sell, a little bit more and go a little bit deeper, right? But when you think about it, like I said, I only like to trade at the equities open. So taking the trade here at 730 or 745 instead of taking it at 28,600 is essentially kind of late, right? Depending on how you look at it, right? And so to me, it would be kind of late, but at the same time, you could come in here and you could definitely find R multiple edge, right? So like we were looking at positions inside that 15-minute area. It was in the last 15 minutes of 7, and we were looking for maybe just like moves down on this 5-minute down into the equities open, okay? And so was a small profit on that, but getting to the equities open, when the 5-minute candle here at 830 to 835, this candle engulfs, right? What I'm looking at, right, is the sells down here like this, and then this candle engulfs and breaks structure, right? Because if you look at a line graph at this point now, that's a break of structure, right? And so when I see that signal, to me, right, I'm looking at 15.5 to frame up the trade, but I'm also looking at like a 1 minute to take the trade. But I'm only looking at that 1 minute at the close of 5-minute candles, okay? And so once they close that first 5-minute candle and they break structure, I'm starting to identify this level right here, this 15-minute area that's inside this FEG. I'm identifying this level as a level of demand. Now, why do I identify this as a level of demand? Because what happens is we're all playing what we can see. So if you have all these individuals that are playing like 1 minute and 30 seconds and stuff like that, what they're not seeing is they're taking trades emotionally when the price is going up. When I was taught the trade was buy when the market is buy when the market is crashing and sell it when it's taking off. So what does that mean? That means that when you're taking like a 5-minute or 1-minute trade, you don't want to be buying it up here, because that's what makes you susceptible to risk inside these little inefficiencies on the way up. You want to be positioning yourself as good as you can with what I call buying below point of interest in bullish conditions, or selling above it. So if you feel like you're in bullish conditions, the best spot that's going to appear on a 1-minute and a 5-minute setup is going to be down around that New York Open, right? So essentially the equities open, I'm just kind of going over that one at first. There was a beautiful order, right? When you look at that equities open, there was a beautiful order when that 5-minute wick, right, goes down. Now, a 5-minute wick, I have this here in my notes as well, and I put this before, but a 5-minute wick is usually a good 1-minute demand formation, right? And so if you get a 5-minute wick here and it's wicking down to the area, but you're getting the dump candle plus the sign of strength, and then it's testing the New York Open here like this, that's actually a pretty good setup. I could have definitely came in, market just opened, cool. I could have definitely came in and found a buy position in here like this, right? Like I liked how this was looking, right? And it would have definitely presented, I believe, 1 to 3. Let's see, right? 1 to 5. It would have presented a 1 to 5, because I'm looking at the price action from taking it somewhere at New York Open or below, right? Like if you can take it right at that price or below, that's like exactly the entry model you're looking for. And then a 5R, which is a 100-point move, right? You would have definitely been able to see the price move up to here, come back, and then still move up to the 5R. But it would have for sure, right, delivered you at least a 3R trade, right? Because you would have got in here, it would have delivered 3R in literally 2 minutes. Okay, and so how I like to take this type of trade when I'm looking for 5R, or at least trying to produce 3R on the day, right? I'm looking to take that trade, and I'm looking to take when it hits the 60-point mark for the 1 to 3. If I have 4 contracts on, or if I have 6, or I have 10, doesn't matter how many it is, but you want to play when you can cut your volume in half at the 60-point mark. But let's just say hypothetically for this example, we'll use 4 contracts. Well, when you get to this point, you want to have 2 contracts setting ready to sell, right? So like as soon as it delivers that level in the first 2 minutes, it'll go ahead and knock that order down and make you psychologically what I like to be in, what's called a carefree state of mind. Okay. Now, this isn't the RSV order that I'm talking about, but it actually is but you have to be understanding how to manage it on the first 5-minute run up, because what you got to anticipate is most likely the market's never just going to like go from a 5-minute and just go straight up. Now it can, I'm not saying it can't, right? But most of the time it's going to give you a nice strong push and then mitigate some of those individuals and then start to really run the price. And so looking at this, like I said, this would have been a pretty good setup, but I personally wasn't looking to play this based on how it was looking when New York Open was happening. Okay, but there was definitely a 1 to 5 and a 1 to 3 there that was definitely able to take. Now, the RSV model, the one that I'm basically breaking down here in this video, is essentially the main thing about the model is you want the timing. So I'd say sometimes you have to sacrifice the edge, right, and just probabilities, and understand, making sure you're taking the proper amount of trades per day, and taking the amount of proper trades per week. But I would say this model, the best times that it happens, or like mean reversion plays or like reversal type plays, are going to be in the first 15 minutes of the hour or the last 15 minutes of the hour. Okay. Now, there's certain things that I look for inside intermarket analysis that help me identify, because I'm looking at special zones that tell me to look in that area to identify what's going on. And so we really, structure everything off of fair value gaps and supply and demand. And so now when you look at that New York Open, I did go over like what could have been possibly a pretty good order. That was the first run up. But here's where I've lost a lot of trades when I first started trading, Nasdaq in general. I would catch that first, 15 5 minute, 1 minute move, and then I just wouldn't manage or take profit the correct way. And I think that's what happens to a lot of people, is then they get mitigated, right? And mitigation is them testing the price once again inside the demand before they run the price to the direction they want, right? And so how many times have people, you got in a trade something similar to this one, right? And this is what I was taught when I first learned these methods, was you get into a trade like this, right, where you have the candle. Let's just say this is the candle, right? And it's just like this, right? Price will play and go up. You've taken a great buy position on the way up, but inside these little areas on the way up, all of a sudden they spike down, right? Take you out, or take your trailed risk out, and then go in your direction, right? It happens to everybody. What's happening, that's mitigation. All right, so now you have to not only know buyer market making or models and stuff like that, you've got to know where supply and demand is. And so what really helped me see this, and I considered this an RSV play, was now the timing was at 9:30. Now each there's been 3 days in the last, I think, 2 weeks where 9:30 has been the move. Like if I went back and kind of did a case study here really quick, I want to say yesterday as well, there was a great move around like 9:30 to catch another buy to continuation. But there's been a lot of moves when you go back and study around that 9:30 time, right? So 9:30, this was on Monday, price shoots up, right? And then starts to fall over right after that. So it's been a really, really key time. And so we actually took a break for a second because I wanted to wait till like 9:45 to see if we were going to mitigate in this area. And then what we ended up seeing was right here, this was around 9:05 to 9:10, right? Like I was basically seeing this area play like this. On a 15, it looked like this for me, right? So I was anticipating like this area being demand, right? Like I was seeing shorts cover inside this candle here, and I was watching price action 9:05 to 9:10. We started seeing signs of strength, and then this would have been 9:10 to 9:15, and then the new candle, right? And so at this exact moment, when you're looking at it between that 9 and 9:15 time, it's hitting off the 15-minute demand candle perfectly. It's it's respecting that area and then turning into a wick, because price only turns into a wick excuse me, when it moves really fast on a smaller time frame where there's going to be bodies, right? And so like you can see the bodies here on the 5 minute. And so looking at it from this perspective, it actually looked pretty good to have a chance, right? Like when I was looking at it from 9:05 to 9:10, I was thinking like this tap of 28,400 inside the 15-minute demand as well as the 5 minute perfectly, like this 5 minute candle right here is what we're focused on. I see that as like a pretty good trade. Now, what I seen and noticed though, right, and made me say, hey guys, we'll probably wait till 45 or like a little bit later, was when they pushed off at 9:05 to 9:10, they couldn't break structure, right? So the candle actually ends up going 9:10 to 9:15. You still get no break above 28.5, and then the next candle, which was very important to me, 9:15 to 9:20, is they closed a 5 minute candle bearish inside this area. Okay, so I'll bring back that 15. But at the same time, when you have this intermarket analysis and you're understanding what they're doing for these shorts from 28.6, I could see, as long as we weren't going to go and essentially do this. Yeah, go back here. Yeah, let's do this. So essentially what I'm watching when I'm watching this setup at this exact moment, 9:15 to 9:20, I'm thinking they're going to push it a little bit lower and wait for the right timing for that algorithmic move, right? But like I said, we've been watching it at 9:30. And then the next candle, right, which was 9:20 to 9:25, we're starting to get a sign of strength. And then we get that 9:25 to 9:30. That's when I started really looking at this as like, okay, they're holding up the 15-minute demand inside this 28,400 level, and there is potential for us to go and take out, in my eyes at the time, these were equal highs, right? So when you look at these highs here, essentially like on an intraday type of situation, and I'm looking at like this high right here to this high right here, right? But what I'm looking at is that it's like a double top, right? As essentially an area as a target where price could eventually go and break the structure on the 15 and the 5. And so now it's kind of all coming together. If you can see here, let me make sure I have the 1 hour right here. So now, like what I want you guys to see too at the same time here on the 1 hour, all at the same time, this is all happening inside, right? The 1 hour FEG. Okay, so we're looking at this area here, right? This is all happening when I'm looking to my left on a higher time frame. This is all happening inside that area, and there's no bodies closing on the higher time frames like H4, H1, right? Past this candle, which is showing me signs of strength as intraday time frames, right? 15 and 5 are making the mitigation setup. Okay. Okay, so then 920 to 925, we get that sign of strength. Right now, one of the main things I'm looking for in the RSV model, right, the right side of the V, to show me that the turn is really in, is that there's going to be this mitigation setup. So we have this low, we have this high, and then we're looking for those specific things to hold inside 15 minutes. Okay. And so after you get the 5 minute sign of strength, now this is where you can go into the lower time frames, right? It's like the 5 and the 1 to really get nitty gritty on what I do after I see this sign of strength. Now, as soon as this is what my eyes see on that 5 minute, as soon as I get that sign of strength inside of accumulation and prices respecting, like I said, the FEG, 28,400, 15 5 minute demand, all in this area, anything on the right side of this 5 minute sign of strength, I'm essentially attacking 28,500 and 28,550 and possibly the FEG and all-time highs at this point, right? Now you want to have your first initial target. Now what I do when I get that 5 minute sign of strength is I draw a line. Like I do this in my head very quickly, but look, when I go back, I'm showing exactly what I see so you guys can do it in the very beginning. I draw a line on the right side of the sign of strength, and then in that second candle after the sign of strength, I'm looking for a 1 minute mitigation that I can play. Now, I'm not just looking for any 1 minute mitigation as well, right? I'm looking for the mitigation that's going to close at a 5 minute close, right? So you have 25 close right here, right? And so this is on the right side. So everything on the right side of that 5 minute close, there's a possibility, right? So 924, there's areas that you could possibly find. Now, here's the other step to it. I want to be able to position the risk on the 5 minute prior bar. So now you have to think from risk to entry, and we'll just stick with the 1 to 3. What I mean by this is I want my risk to be on 5 minute prior bar. I'm anticipating this is the prior bar because like I'm anticipating this next candle to open, okay? And so you want your risk, and these are preset already. I know that the low on this candle is going to be, the low is 28,404.75. Okay. For 450. Okay, cool. So essentially what I'm saying right here is you want your risk to be in alignment with this is the bar printing, this is the prior bar. You want your risk to be in alignment with the 5 minute prior bar, okay? And so now you've got the 5 minute sign of strength, and then you're looking for that on the right side. So now right here, this was 929 going into 30, and then you have a new 5 minute candle open, which was going to be 30 to 35. At this exact moment, for me, the next candle that printed on this 5 minute, it's after the sign of strength candle. This is where people start to like sell and think that it's going to roll over. But what they're not seeing because of where they're at inside of H1, 15, and 5 minute, the higher time frame fair value gap, and then the demand on 15 and 5, they're not seeing what's really happening, right? And so now what you have the opportunity to do once you know you're inside that right area and you're seeing price start to crash. Remember I said you want to buy when the market's crashing and you want to sell when it's taking off. Most people are buying when the candles are white, when they're already printing and they're going in favor, right? Now, not saying there's nothing wrong with that, but I'm saying you want to position that on like a smaller time frame, like something like this. And so we started looking around 9:30 going into 9:35, and anywhere really in here, when you look at this, anywhere really inside this this 1 minute bar, like after this candle prints here, like anywhere in there, you could take a trade. Now, some people will, like, I would say 28,450s would be good, but look as I move really quick. I just want to show you guys this. Look as I move this little target tool, right, to 28,450. You see on the left side how it's inside the 5 minute expansion? So what I'm saying by this is you really have to be very precise in the fact of getting yourself inside these demand down candles and framing yourself around the opposite, right? So you basically have to think the opposite of the masses in this situation, right? You're seeing it go down, but you have to be thinking possibly based on what we're seeing in short covering, right? It becomes very natural once you do it a few times over and over and over, okay? And so people are like, well, it's kind of tricky because it looks like it's going down, but it's like at the same time, it's we're in a bullish market, okay? But so let's go back over, the RSV model, higher time frame context, right? You want to make sure that you have understanding of market environments, what you're looking for from the overnight trader, right? The overnight trader, from my perspective, yes, they were, they were definitely in a massive, like people had bought up the price and there was lots of craziness in that overnight where price spikes like 200 points and 1 15-minute bar, and then there's just all this chop that happens in between here, and this everything in the blue is the overnight. And then the London session open, obviously we have a price rally, right? We've seen oil sell off, and so it's really what happens for me to people 4 hours before I start to play, right? Because I know, like I said, when I put myself in other people's shoes, I know if I sell a position from 28,600 and I get to this area and I don't see price going below this candle even here from 315 to 330, I'm going to start to cover and I'm going to start to trail my risk down on positions as well, right? But higher time frame context, then looking for are there going to be someone, an individual covering, right, a position, right? Where are the holders? I sent that in the group chat on the Discord, and the mindset call is, Lance Breinstein said, you want to be in the mindset of like the people who are currently holding a position, what are they about to do? Okay. And so then I went through the lower time frame context, right? So we're looking for New York to open, right? We got the New York to open. Then we end up seeing price, create FOMO and run up to 28,500 on that first 5 minute, 1 minute run, right? And it was a beautiful run. But then, like I said, the only thing that would have made this a little bit better of a trade would be the timing of first 15 or last, but it doesn't have to be like that. You don't want to be so critiquey that, you miss on setups as well, right? Because it's not going to be one trade that changes your P&L completely. It's going to be a series of trades, right? So don't be like so critical on yourself. But main thing I was saying here, and this is a little bit more advanced stuff, but it's going to be, like I said, you want to really start being a certain way on yourself once you're playing these type of positions to understand like what is late and what is kind of like emotional based on what you're seeing. The other thing I want to show here is like if I take this 1 minute setup, because that's where most NQ and ES and YM traders take trades, is on the 1 minute. You also want to evaluate like your 15 and 5 location, because like imagine if you take this at the 450s, right? Now, if you're evaluating I'm going to move this out of the way so it's just not in the way for here. But if you're evaluating the edge based on this demand candle, right, 915 and 930, this essentially is actually a pretty good trade, right? Because you've caught this was the first leg. Now you've actually caught the second leg that's going to, run up and actually produce the most of the day. But obviously we had a really big blast above all-time highs. But that's the leg that you're trying to attempt to take, right? Is that mitigation play. And so when you look at like just getting in on that entry, like I said, from 930 into 935, you want to make sure as well, right, when it comes to location 15 and 5, that you're inside the demand levels as well, right? Because when you put yourself in position inside these demand levels, all I'm essentially showing you is you're gonna put yourself where you don't take on heat. So like, let's say you took the position, framed up here, right? And you're framing this on a 1 minute, let's say essentially the same way you frame it on 15.5. You have a demand candle, which is here on the right, right? And then you're framing from the perspective of thinking 15.5 location, right? So everything inside, if I hover over that left candle, that's a great trade. If I go out of it, it's not so good from that location's perspective. But when I change my eyes and say like, okay, I'm looking for this to be the next demand candle, which would be this candle here, this actually is not a bad trade based on what you're seeing on 15 and 5, right? Now, targets, obviously, you're going to look for like an all-time high perspective, right? Like once we had that turn, we know it's in, right? At that 9:30 to 9:35, the 5-minute candle closes and breaks structure, right? So the body close actually breaks structure. So these are little things that you notice when it's going in your favor, okay? So the body close breaks structure, shows a lot of strength, right? And then as well, that was the 15-minute close, which when you look at it from like this perspective here, right? Like this was accumulation, and then they broke out and closed above the area showing signs of strength, right? And so like for me, as soon as price starts to break up to the high side, I don't just immediately get excited about the all-time highs, because as they get into the supply level, which will be here, 28,600, noobs buy tops and sell bottoms, right? So what that means is like everywhere past 28,550, like right here, people start buying this and they just take them out with candles like this before they run the price higher to all-time highs, right? And the reason being is just because it's just the location of the swing and where they're at opposed to supply demand. So I hope that helps out, like understanding the RSV model when it comes to NQ. That was the position that we ended up taking today. Now, if you're taking some of these swing trades with us, we're taking the same trades that we take on the NQs on the NAS 100s. Okay, so like essentially we were talking a lot about the position that's like 5,500 points in profit and just trailing risk up based on weekly, daily lows. And then we also were able to take a $4 position. So I'll pull it up. I think I have it on the Discord here. We were able to take a very similar position. Where was it at here? So a very similar position on CFD, right? So you can do that with like FTMO or just like personal brokers, stuff like that. But took a $4 position here, 20 handle risk, right? And we were looking for at least to get into, and this is like an add-on to like this overall bigger bias, right? Because we took this and we're looking for price to get into this candle. And so when it got up into this area and it started to show that resistance inside that 28,500, I ended up pulling $2, right? This is CFD, so pulling $2 of the volume of the 4. And then I had left 2, and then it kind of showed me some signs of weakness here with this candle 11:45 going into 12 noon, and I was thinking maybe okay they're gonna reject this area, price could come back and fill the FEG or possibly come back into demand. And so in that situation I cut it down to $1, let that thing run, and then we have market open. And I've trailed the runner to the low that was set here. So whatever happens. If they come back, we're at all-time highs. We're not really thinking that things are just going to go parabolic to the upside for us at all times. So I'm not going to talk as much about oil other than the fact of, it helped with the bias. It fell off overnight. I anticipated short covering, which I thought we would see some short side on NQ, which like I said we did, right? When you look at crude here, crude on the left, NQ on the right, we did, right? Like when you look at the sell-off here, we rallied on NQ on the right, and then when we started to cover it at $90 a barrel there on NQ on the left, we started to sell off at 28,600 on NQs, right? So right into New York Open's hand, right, to manipulate some individuals here at 28,400, and then to reverse and go take all-time highs to close the day. So We'll see what we get for tomorrow. I'm pretty excited to still see what oil wants to do, at least crude for WTI. I am going to also start looking at the futures data and a couple other assets around that class just to kind of have some comparative strength analysis. But looking at 4 hour on it right now, with that massive wick down, the commercials are going to get the wick price, the retail traders inside the body. It's just how it works. I would say in this situation here, they've got a really good price on that level, like running it all the way down to 90. So I'll be on the lookout to see if we can get back into that 98, 99 level. But I am watching this level, I would say, more tonight. Right, because this is like a big area of demand that can be a part of what we see for tomorrow. So I'll be looking at like this. Right, you could definitely see a spike down, right, into this area just to like secure and clear up some liquidity before the move up. Like to supply here. And we like to use these levels. I'm making a video over this too, but we like to use these levels to understand where buys are gonna exit, and we like to use this level to understand like demands and stuff like that as well, like where shorts and stuff are going to cover, and then also we can anticipate where breakout structures are gonna come if we're in like a parabolic market. But I would say this has just been hugging the same area for how many 4 hour candles? Let's see. It's been in the same area for 12 hours. Right, so I'd like to see how these 4 hour candles print in this overnight and see if they're able to clear up some of this liquidity inside the demand inside the FEG, and if they don't and they continue their way up, we'll see if we start to see some more downside back into that 28,500 for NQ and back into where I'm sure longs are trailing risk and trying to secure the bag and all-time highs. So with that being said, I appreciate you guys watching this or watching the recording. And we will be live inside the Discord tomorrow morning. So have a good night and peace.